Welcome to the M&A Tax course by Mergerverse. And so today we are going to cover section 115BAA and BAB of the Income Tax Act. So Finance Act 2019, second part after the election, introduced these two sections for new regime basically for the companies, and it provided a lower rate of taxation for companies. Now 115BAA is the more simpler section which is applicable for any company, and it provided a effective tax rate of approx 25.17%, which is 22% tax plus 10% surcharge and 4% cess. And there are no major conditions, but basic condition is you have to give up most of the exemptions or deductions available under section 10AA 32 or 32(1), that is additional depreciation, 3280, that is, and then you have to give up most of the 35 sections benefits and deduction under chapter 6 apart from 80JJAA or ATM. Which is important is section ATM is still available for 115BAA, which can be helpful for you if you are thinking about repatriation of income from dividend. And also for a company that is opted for 115BAA, the MAT's provisions will no longer be applicable. So this section is mostly routine and not very not major complications arise for this one. And in general, if you see company has opted for 115BAA, it's most likely that this company is unlikely to be taking benefit under 10AA or ATI series, and so you can have a easier time doing diligence of that company. Now if we go to 115BAB, this one is specifically for manufacturing company, but in the manufacturing company an important part is that companies which are generating power are also covered, and a lot of the deals in India currently are in the renewable sector, and so a lot of these renewable power generating SPVs would have opted for 115BAB. Now which is important because in 115BAB, if a company opts for 115BAB, then it is subject to domestic transfer pricing on related party transaction with it with even domestic entities, which can be very crucial, especially in renewable sector, because there are various related party transactions which take place between service provider entity and the power generator entity. So for example, in renewable sector you will have a SP which is in the in generation of power, and there will be another entity that provides EPC services to that entity or to a whole group. So those transactions between the two have to be compliant with transfer pricing. And if there are further in renewable sector, you will also see various loan transactions being given between the SPC, especially at the early phase when they are not in profit generation phase, because they would want to move the funds within the group so that they can use internal funds wherever is necessary. So this section is very important for that. Another nuance what I would like to tell you was something that I worked on in one of my cases. So in one of the conditions for 115BAB is that you have to commence manufacturing by 31st March 2024. Now in one of the due diligence we had 3 SP which had a very complicated case. One of the SPVs got the partial commercial operations certificate by February and the full completion post March. Another one had got a trial run certificate just before 31st March, and the third one got it after 31st March. So there was a lot of back and forth between the client. We were on the sell side, so between the client and us on the remaining 2 SPVs, whether they were eligible for 115BAB or not. Thanks for watching.